We're in the second major week of earnings season, but last week I said we're looking at those earnings reports, and newsflash, they were all generally positive. All of the concerns about what's happening with tariffs and how it's going to destroy the American economy at this point has largely been shrugged off by the American consumer and by businesses. Good morning and welcome to Life in the Markets. My name is Tim Russell and today is Monday, July 28th, 2025. And looking at what happened in the markets this week, we've seen the S&P 500 had a very positive return last week. We were up 1.5%, which is really interesting because it's only been 74 trading days since we hit the low in the S&P 500 mid-year that was back in April. 73 trading days, here we are at all-time highs. That's only 108 calendar days, which I think is pretty interesting. We have seen the market recover 32% from that low point in April. Now, I think at this point, a note of caution is absolutely warranted. I don't want you as an investor to simply expect, well, anytime the market goes down, it's simply gonna snap back and recover just like that. We certainly have seen that to be the case over the last number of downturns. We saw that with COVID. It was a very sharp, very painful, very scary downturn, but a very rapid recovery. We've seen that with the Trump trade deals and with other smaller type events over the last number of years. So here's why I want you to just take a break for a moment and don't expect that this kind of recovery in terms of its speed and its sharpness is just going to always be the case. So this is what I said back when we were doing our quarter end recap just a couple weeks ago. I said that market or news-driven market events typically revert to the primary direction, the primary trend it had before the news, within a short period of time. I think I said 6 months. So the key word there is this is news-driven market events. When all that is fundamentally changed in the economy is simply what the news media is telling us, that the fundamental health of our economy, of our consumers, of our labor force, of our businesses is sound, and just the news narrative has changed, you can generally discount that. You don't need to worry too much about news. What you do have to pay attention to, however, is when what they're reporting is not some kind of news-driven thing, like tariffs. The tariff war is par excellence of what I'm referring to. That's all news-driven. Those tariffs were something that I think Donald Trump knew if he left in place would have maybe longer term impacts on our economy. But again, in Donald Trump's mind, what he's trying to do is not present tariffs for the sake of tariffs by themselves, but to use tariffs as a way of helping strengthen trade deals and so forth like that. We'll get into that here in just a minute. What we're looking for is economic news that is reporting the businesses slowing down, that consumers are weakening, that debt and delinquencies are increasing, that homes are in trouble in terms of maybe their price or their equity, the interest rates, and are borrowers able to pay back the loans on time. Those are fundamental metrics about the health of the economy. Now, why do I say pay attention to those things more than the news blips that happen? The reason is because the news blips are blips. They're here and then they're gone. The news cycle moves on. We're worried about a new thing. The fundamental economy is going to affect the day-to-day operations and the profitabilities of businesses, which is what the stock market anticipates and looks towards. So I think with that, it might be helpful for us to just pivot for a minute and talk about what's happening within earnings season, because that's really the whole point of this. We're in the second major week of earnings season. We've got a lot of very interesting earnings reports coming up, but last week I said we're looking at those earnings reports, and newsflash, they were all generally positive. All of the fears, all of the concerns about what's happening with tariffs and how it's going to destroy the American economy, at this point, this is like as of today, has largely been shrugged off by the American consumer and by businesses. They've been able to control their costs, manage their pricing, and maintain profitability. I cannot predict that will always be the case if all of the worst case scenarios for tariffs stay in place. I certainly don't think that will be the case. However, I do think that Donald Trump is willing to allow some really difficult tariff rates to roll on to countries that are not willing to come and to make a better deal with the American economy. So that being said, companies are strong, earnings has been robust. We have a number of companies releasing earnings reports this week. So here are a few to look for. Some of the biggest companies out there, we've got Microsoft, Apple, Amazon, Facebook or Meta, Visa, I think is going to be an interesting one, showing Visa and MasterCard, showing the relative health of the American borrower. At Exxon, we've got a few others that are coming through. Interesting, I think Exxon and Chevron, big oil and energy companies, which has largely been struggling over the last number of months. It'd be very interesting to see how those two companies maybe act as a bellwether for how the general sector is doing. That being said, we'll keep an eye out for earnings. But I think really the thing I'm most interested in with earnings is what does that tell us about the health of the American consumer and the health of the American business. The next thing I think is worth getting into is the trade deals. We have this week the self-imposed deadline by Donald Trump to have all of the trade deals inked or agreed to. That's August 1st. That's coming up this week. And what we've been observing as we look out at what's been happening over the last few weeks is the closer we get towards this deadline, we're seeing a lot of deal activity start to flow through. So we saw the Philippines and then Japan, which is a really big one. Then we saw there's a framework with the UK. Those are some really beautiful and robust trade deals that can help boost the American economy. Japan, for example, is investing so many billions of dollars here in America to build American industrial infrastructure as they invest in companies here in America. That's a good thing that can help bring business, bring employment back into our country. This can be a very healthy thing. We're now seeing over the weekend, the European Union has agreed to a trade deal with America that will result in a reduction of the threatened tariff. I think it was 30%, now reduced to 15%. And it will involve a $750 billion energy deal, which means that Europe is going to be buying about $750 billion of energy from America, which is, again, a great thing. America is now one of the, or if not the largest energy exporter in the world. And we're seeing about a $600 billion investment into America. Again, this is all investing into companies and manufacturing and industry happening here in America to bring jobs back to America, to help bring manufacturing back to America, which is good for our independence, it's good for our economy, it's good for our employment, it's good for the average worker. Again, this is not stuff that's just pie in the sky. This is something that has real world potential benefits for individuals who are working, looking for jobs, looking for quality and high paying jobs. This could be a very good thing for our American economy. There are still a number of notable trade partners that we still don't have deals with yet. So among them, we're looking at Canada, Mexico, and the big one, China. We have a number of very positive developments with China in particular. And in fact, today, Scott Bessent, the Treasury Secretary, this is Monday the 28th, they're meeting with, or Scott is meeting with, the Vice Premier of China to try to work through the framework for a deal with China. So I would really highly expect, given the deadlines, given what's coming up this week, I'd pay attention to what comes out of these conversations with Bessent, because the news that comes out of there is largely going to move markets, if it's positive or if it's negative. So pay attention to what happens here with China. Again, one of our largest trading partners, and it's certainly important for us to get a healthy and mutually beneficial trade deal with them. Canada, Mexico, I also expect to have some news out this week, either about extensions or about ongoing negotiations and discussions, or maybe even deals themselves. So pay attention to those two while you're thinking about it. Or frankly, don't pay attention and tune in next week. We'll tell you what happened, okay? All right, so those are the major things that I think are important for you to keep an eye out on the economic calendar coming up this week. The only thing that is top of mind for me is on Friday, we'll have a new monthly jobs number, and that is going to help us know the strength of the American worker, the workforce, labor force here in America. Again, that tends to be somewhat of a bellwether for the general strength and robustness of the American economy. Are employers hiring more people, or are they laying off more people? That tends to indicate some things to look forward to down the road. All right, I've already gone on long enough. So what questions do you have for us that you'd like for us to tackle here in the market commentary, the Life in the Market? I would encourage you to reach out to us at contact@thelifegroup.org, put Life in the Markets in the memo line, and shoot your emails to us with questions or issues that you'd like for us to address in future episodes. I'd love to get your feedback. By the way, this is a video podcast as well as an audio podcast. So if you're listening in one way, be aware of the other. I would also encourage you to like, share, subscribe to our YouTube channel, like the video, respond in the comments. This is very helpful to get more people aware of the content that we're putting out. I would be very grateful for that. Don't forget, we have a book. If you're interested in learning how to become an even better steward of all of your assets, we have a book called The Good Steward, which really lays out our biblical framework for trusting God with all of our wealth, investing wisely, not placing our hope and confidence in our wealth, but in God, but still investing wisely for the future. You can pick that book up on Amazon and many other places. Go to our website. You'll see the link listed in the show notes to find a copy of the book near you. Our closing verse for today comes from 2 Corinthians 9, 6 through 8. It says, again, in summary, whoever sows sparingly will reap sparingly, but whoever sows generously will reap generously, for God loves a cheerful giver. That entire passage in 2 Corinthians 9 is such a beautiful passage. What I want you to take away from that passage in 2 Corinthians 9 is really this. If God has blessed you, and so many of the individuals who are watching this video right now have been blessed far beyond what they could have ever asked or dreamed of, God is not just blessing you for you. Yes, certainly, He loves you and He wants to bless you, but you are also a conduit for God's blessings towards others. If you are looking for God to bless, I would encourage you, continue to be generous. We don't look at God as some kind of cosmic genie in the sky, a cosmic vending machine where I put money into the God machine and I get out what I want. He's not mechanistic that way. But the promise of God is here. He says, if you sow sparingly, you'll reap sparingly. But if you do the opposite will happen. Trust God. He's good. What you do when you give money away, when you trust God with your money and you put it back into circulation, is you say, God, you mean more to me than money. And that's the heart that God blesses. That's the heart that says, this is what I'm looking for. This is what I want in my children. Children who trust me more than my blessings. So today, I would encourage you, look at your giving, look at your generosity. See where you might be holding back because you're afraid to give it. Do you trust God? Do you trust His goodness and His continual provision? Don't give to get, but give, and God often provides even more. Trust Him. He is a good God. All right, thank you so much. Have a great week. We'll see you next time. Be safe out there in the markets. God bless.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. Securities and advisory services are offered through Genius Wealth Management, member FINRA and SIPC.